Hey guys, what's going on? It's Lewis here with Crypto Elite, and in today's video, we're going to be going over video 3 in the Crypto Trading Bots 101 series using 3Commas trading bots. This is a tutorial series how to use trading bots using the 3Commas trading software. In this video, we're going to be going over a lot of material, so definitely strap down and buckle up and make sure that you have your 3Commas open and you're ready to take notes and you have enough time, because this is definitely going to be going over some more advanced features. We're going to be going over composite bots, we're going to be going over safety order volume scale, safety order step scale, and deal start conditions in this video. And now before we get started, I do need to have the disclaimer. The videos in this series and all of my videos are for educational purposes only. I'm not a financial advisor and none of this is financial advice. Bots, they're not foolproof, so you can lose your money with bots. Even though they are amazing, you need to know that, so you have to be careful, and you should really start off slow and learn how they work first before going in heavy if that's something that you want to do. And I mean, that's why I'm making these videos. They're educational videos to help you understand how bots work so that you can start off slow and that you can test them out on your own before making up the decision, your own decision, if you want to actually utilize them. And the other thing that I want to say is that actually understanding the markets, understanding market cycles, understanding how to trade, understanding technical indicators and things like that, that can help you set up and take advantage of your bots and get more profit from your bots, like substantially more profit from your bots, if you understand the basic concepts of how to trade. And so if you want to learn how to actually trade so that you can make even more money using these bots, then you could go over to cryptoelite.com/home and you'll see an option for the crypto mastery course that I created that really just breaks everything down for you, A to Z, simple steps holding you by the hand. And if you like these videos, like these educational videos, you will love the course because it definitely teaches you how to trade effectively and intelligently. And like I said, if you know how to trade, if you know technical indicators, then you'll have the opportunity to make way more on your bots. And of course, that's what we're all here for. We're here to make as much money or as much sats as possible. So definitely check that out if that's something that you're interested in. And then the other thing is that you could join my Discord channel at cryptoelite.com/Discord. I have a free Discord and I have a paid VIP Discord. In the free Discord, you'll get market updates, you'll get Bitcoin, you'll get Ethereum, you'll get my general view of the markets, and I answer questions and things in there. If you join the VIP, you'll get a much more in-depth market update, and you'll get signals and you'll get alerts, which are super important because it tells you exactly when to buy, exactly when to sell, all of that good stuff. And I'm pretty much in there 24/7. So if that's something that you're interested in as well, head over to cryptoelite.com/Discord and you'll see the options to join there. Now, getting started, what will you need? Well, by this video, you should definitely have all of these things already. This is video 3 in the series. So if you don't have any of this stuff, go back and watch video 1, start from the beginning, step by step. This is how I break it down. But in case you don't have this stuff, you will need an account on 3Commas. I have a link for a 3Commas account in the description below, so you click that if you don't have one. And you'll also need an account on an exchange. You could use Coinbase Pro, you could use Binance, you could use FTX, you could use Kraken. Use whatever exchange you want as long as it connects to 3Commas via API. And also, if you want to get started right away and you don't have an exchange, you can set up bots on 3Commas using their paper trading account that they give you to test things on. So even if you don't have an exchange, like, you're going to need an exchange eventually to make money, but even if you don't have an exchange, you can go to 3Commas and they have a paper trading account. And that's exactly what we're going to be doing today. We're going to be utilizing the paper trading account so that you could understand what these bots do and how they work before risking your own money. And finally, the last thing that I want to say is that if you use Binance, make sure you have some BNB so that you save on the fees. Bots, they trade a lot, and every time you trade on Binance or on any exchange, mostly all exchanges, you get charged with a fee. So even if you could save just 0.25%, you should do that, and BNB helps you do that. I believe FTT helps you do that on FTX exchange. So definitely hold some BNB if you're using Binance. Definitely hold some FTT if you are on FTX, which is actually my personally favorite exchange. And so getting started with this video, we're gonna make it super easy for you. So we're gonna recap videos 1 and 2 super quick, just so that you can understand exactly where we are in this video now using composite bots and the more advanced features. In video 1, we created a simple bot on the Ethereum USDT pairing that would simply buy one time using a base order and then sell off for a profit. It would then continually repeat this over and over and over again. And so that you could visually understand this, I created this chart. This is the Ethereum Tether chart. And let's say that you set up a simple bot using those parameters, no safety orders, nothing like that. Then basically that means that you buy it right here, or let's say that your bot bought it right here, and just about 1%, this is just like 1.2% above that, you have the bot's profit order. So this moves with the average buy-in price, always staying X percentage above it. But since you didn't create any safety orders in the particular bot that we created in video 1, it will simply stay right here. It'll stay stagnant right above the bot entry price. So in this case, what happens is the bot bought right here and the take profit is right here, and it'll just remain that way until it gets hit. So boom, the price came up here and it hit. After it hit there, what happens is the bot will buy again, automatically buy again, and then the new take profit will be around 1% above that. And then what happens right there? So then this comes up, so then the take profit would get hit, and then the bot would automatically buy again and create a new take profit right there, which would get hit immediately pretty much. So then the bot would buy again right there, and with a new take profit right about there. Keep on pressing play. And so at this point, the bot would have bought right there, and the new take profit would have been somewhere up here. And let's just say that it never touched it right there. Then you would be at a loss of about 3.2 or 2.5% right now. And you have to wait until the price comes back up to your take profit. That is the simple bot with no safety orders that we created in video 1. In video 2, we created a simple bot on the Bitcoin USDT pair that would initiate a $100 base order and then buy $100 every time the price moved down 0.5% up to 9 times, because we had 9 safety orders set. It had a take profit order that would move with the average buy price, always staying 0.1% above wherever the average buy price was. It would then repeat this trade setup over and over. So using Ethereum as the example again, let's say that the average buy-in price was right here. Let's say that your bot bought right here and it wanted to sell right here. Well, you could see that the price continued to move down. Well, we had safety orders this time. So that means that your safety order would have hit, and this is just random, this isn't exact percentage points, but your safety order 1 would have hit right here. And what that would have done, that would have moved your average entry price from right here to right here. And what that would have also done is that it would have moved your take profit price down to above your average buy price. But you can see that the price went down even more. So what that means is that your safety order 2 would have hit. And when this hit, that would have moved your average buy-in price down a little bit further. And when that happened, your take profit would have moved down with it. So if we keep on pressing play here, we can see what happened. Okay, so then the price went down again, and if that happened, then that means that your average, or that means that your safety order 3 would have been hit, and that means that your average buy-in price would have lowered down to around here, and your bot take profit would have followed that down here, and let's see what happened. It went down again. So remember, you had 9 safety orders in the example that we did in video number 2. So this came down, your safety order number 4, and your bot price, or your average buy price, came down here, and then your take profit would be here. So then what happened after that is the price came down, but it turned around and it just waits, stagnated for a little bit, boom. So apparently it came down again. Once again, you would have had another safety order filled. Honestly, you probably would have had 2 safety orders filled on this one because it was such a significant dump. Your average buy price would come down here. Your average take profit, or your take profit price, would come down with it. And then eventually, Hopefully it doesn't dump again. I guess I didn't pay too much attention. This one might have had another safety order, but we're just gonna ignore that. And hopefully this comes back up to get to the take profit. I don't want this. There you go. Take profit. And you finally would have had your take profit. It would have taken a while, but you would have had your take profit right here. And then you would have restarted the whole ordeal again if we just get rid of all of these safety orders that were put in place, and you would have just restarted again, somewhere up here, and your take profit would have been up there. And I'm just going to play this to see what would happen. You would have got your take profit immediately on the second time that this would have happened, and the third and the fourth. So it would have worked really well. And that's cool. That's cool and all. And that's what we just went over in the last video. But this is just for one coin. What if you wanted to do this for 10 coins or 50 coins? Or what if you wanted to do this for 5 coins, but you wanted to scan the entire market and have the opportunity come up as soon as any coin reaches your criteria? That's what you could do with composite bots. So like this says, instead of setting up individual simple bots for each coin separately, you could set up a composite bot that will scan as many coins as you want and trade all of them with just one bot. This is important because you need to have funds set aside for each bot. So if you have 10 simple bots, then you will need to have funds set aside for each individual bot. Sometimes the bots, they might not get triggered, and so your funds are not being put to use. This gives you less profit compared to if your funds were consistently being used. If you have a composite bot, you could scan multiple coins and have that bot put your funds to use whenever any of the coins meet your deal start criteria. So composite bots. Composite bots are amazing. You use composite bots to scan as many coins as you want and trade as many coins as you want. As long as you have enough funds to trade at least one coin, you could scan as many coins as you want. You don't need to create 100 simple bots to scan 100 pairs. You create just one composite bot and it does that for you. This is great because it's impossible for you to manually scan the entire market and find deals on every single pair, but you can set up a bot or bots to do that for you. And a very cool thing about composite bots is that you could scan multiple coins at once, and you could also at the same time set the bot to trade only 5, or pretty much however many you want. And this is great because this makes sure that you always have enough funds available for the bot to work. And I know that that was a lot of talking, so let's go into the actual 3Commas platform and create your first composite bot. Alright guys, so now we're in 3Commas, and if you are in 3Commas as well and you click on DCA bots right over here, you should see the bots that you have created. If you look right here, you'll see the very first bot that we created in video 1. Right above that, we have the second test bot, which is the safety order bot, and that is the safety order bot that we created in video 2. And now we're going to create a composite bot. So you can see right here, obviously, I already created a test composite bot using the RSI, and it has all of these different pairs. And so the first bot was a simple bot, and it only had ETH as its pairing, ETH USDT. The second bot was also a simple bot, and it used Bitcoin against USDT. And now we are going to create a composite bot that can have all of these different pairs available to it to trade, and it's very, very cool. So I actually created this bot about a week ago, and if you click on it, you could see that it's actually made over $100 in just about a week, which is amazing. So this definitely shows you that, you know, these bots make money. Made $23 one day, $14 another day, $70 just the other day. So these bots definitely make money. It's pretty awesome, and it breaks down the profit by the different pairs. Solana made a huge gains for this bot, so it's pretty awesome. And we're gonna go over how to make this bot and make different bots as well. So let's start this off. Let's go to the DCA bot and click the little plus sign right here, and that will bring you up to the page that you should definitely be familiar with at this point. And so we're just gonna go down one by one like usual. Main settings underneath the name, this is the name for the bot. So let's name this Test Composite Bot. And I'm actually going to name this Test Composite Bot 2 because we already had our Test Composite Bot 1 that I created previously. But you haven't created one yet, so you could just name yours Test Composite Bot. The exchange, we're going to be using the paper account. If you want to use this on your real account, that's fine, but I'm using the paper trading account for this bot. And here is where the magic happens. Instead of just using a simple bot, we're going to be using a composite bot. So once again, if this is on simple, that means that you can only trade one pair per bot. So you can only trade just Bitcoin USDT or just Ethereum USDT or just Doge-USDT or any of these things against Bitcoin if you choose to go against Bitcoin pairing. But you can only choose one. However, the composite bot lets you put on or trade as many cryptocurrencies as you want, and you could put on as many different cryptocurrencies as you want into the trade, so that as soon as any of the cryptocurrencies that you choose to be in your bot hit the parameters that you set in order to buy in your bot, it will automatically buy and start the bot for any of them. It makes it so much easier and gets you a lot more profits, which is exactly what we want. So we're going to choose composite right here, and then we're going to choose the different pairs that we want this bot to be able to trade. So if you click right here, you could clear it and now you don't have anything. But what you could do is you could actually choose all of the different pairs for the cryptocurrency exchange that you're on if you want. So there's the Euro, there's the BUSD, there's PAX, and then there's USDT, Bitcoin, and TUSDT. You can actually press this button to show all, and it shows all of the different pairings or all of the different base cryptocurrencies that are available. There's BNB, XRP, GBP, TUSD, Bitcoin, USDT, PAX. There's all of these different cryptocurrencies right here on the left-hand side. Those are the base currencies, and that, if you remember from video 2, is right here. It says that the base cryptocurrencies are on the left and the quote currencies are on the right side of the pair. So you really don't want to do anything other than either Bitcoin, and if you click Bitcoin, then all of the pairs will be up against Bitcoin, or, and what I actually prefer is USDT. So you click USDT all, and it'll bring up all of the different pairs that are against USDT on the specific exchange that you are using, for which you can choose right here. And so how do you choose which pairs to use? Do you want to just, connect all of them, or do you want to be specific? Well, to be honest, I like to be specific. I like to be more calculated in my approach when it comes to what pairs my bots will actually trade against. So I'm going to clear that out, and I'm only going to choose pairs, cryptocurrencies that I know what they do, I believe in the project, I think they're fundamentally sound, and I think that they will move up in value over the long term. I'm not looking to really trade pump and dumps or scam projects or projects with low liquidity, projects with low volume, projects that I have no idea what they are. I don't really want to trade any of that. I want to trade companies or cryptocurrencies that I'm familiar with and that I believe in for the long term, just in case the bot uses up all of the funds and then I'm stuck in the trade. I want to make sure that whatever cryptocurrency the bot is in or that I'm in will eventually rebound, and I want to have confidence in that. So not every cryptocurrency will rebound. There are going to be a lot of cryptocurrencies that just fall in price, and if you're stuck in a trade, then you could end up losing a lot of money that way if they never return in value to where you bought it. So I'm going to only choose cryptocurrencies that I really, really like, and that is my recommendation for how you choose different cryptocurrencies. Now, what you can do is, instead of, typing every single one out here and trying to remember them, you could actually go to a site called CoinGecko, which I'll click on right here. And so this is CoinGecko, and this is a site that I like to use in order to choose the different cryptocurrencies and do my research into my different cryptocurrencies. It's a great starting point. And you can see right here, cryptocurrency prices by market cap. So this is actually in descending order of the number one cryptocurrency with the greatest market cap, and then it goes downward from there. So Bitcoin has a market cap of nearly $600 billion for Bitcoin. Ethereum is not even half that. Ethereum's market cap is $227 billion. And then underneath that is Tether with 62 billion, and then 49, 39, 28, 26, and you can see that it just keeps on going down and down and down and down. So Bitcoin, obviously I'm going to choose Bitcoin as part of my bot. Same thing with Ethereum. And then I get to choose the other ones. I already explained how I choose them. So I'm going to choose Bitcoin, Ethereum, Cardano. I'm not the biggest fan of XRP, so I'm going to skip XRP. Obviously USDC is not something that you trade against. I actually forgot BNB, so I'm going to add BNB as well. We are actually already paired against USDT, so no need to add that. I'll add Dodge or Doge. I'll add DOT, Uni. This is another stable coin, BUSD, so no, I'm not going to add that. I don't like Bitcoin Cash, so I'm not going to add that. Same thing with Litecoin, not going to add it. But there's Sol, Link, there's a lot of these cryptocurrencies. So what I'm going to do, and what you can do, is you could go back into 3Commas, and you could start adding these one by one. Now, there's actually this most traded pairs in the last 24 hours right up here, which is super convenient. So we already have Bitcoin, Ethereum, Doge, let's see, Matic I like, Cardano, Theta I like, VET, Link, and DOT. Why not add ICP? I'm a little, whatever, we'll just add it. It's a paper trading account, not a big deal. And then we could add a few more things. So remember, let's go back here. And what were the other things? There's BNB, Uni, Sol. So let's add those. BNB, just type it in right there, and you can see it's added. There was Sol, so we add that. I love Sol. There's Uni, so Uniswap, so we'll add that. And I'm just going to keep on going down here and adding more cryptocurrencies to my composite bot. And once I get all of them in here, then we could get back to it. So I'm going to pause this and we'll get back to it in 3, 2, 1. Okay, so we're back, and I added 28 different cryptocurrencies to my composite bot. So that is pretty awesome. All of these cryptocurrencies will be available to be traded in this bot right now. And so let's keep on going down a little bit further to the strategy, the max active deals. And like we went over this before, but this is how many deals the bot may open at the same time, maximum pairs, simultaneous deals per same pair. So basically what this means is that out of all of the different cryptocurrencies that you have in here, this number will determine how many deals your bot will open at one time. So if you only have one here as the maximum amount of deals that can be active at the same time, then that means that whenever just one of these cryptocurrencies that you choose meets the criteria in order for the bot to start, then your bot will start the deal with that single cryptocurrency, and it will not open any more deals for any other cryptocurrency pairs until that one deal is complete. And this is basically the same thing that happens with a simple bot. With a simple bot, your max amount of deals is always one, because you can only choose one cryptocurrency for a simple bot. But with a composite bot, now you could have the parameters that your bot is set to scan all of these different cryptocurrencies, and you could choose how many max active deals will be open at the same time. And so something to know is that the cryptocurrency market really is super correlated. All of these coins basically run together. So if one or two coins are going down, pretty much all of the coins are going to go down. And if one or two goes up, pretty much all of them are going to go up. They're very correlated. and the market as a whole pretty much follows the same path. Sometimes there's some outliers, but it's super rare. So pretty much if you have, let's say you have this set to like 20 different max deals, then that means that if the market goes down and all of your, deals get triggered, you'll have 20 deals. You'll have 20 different trades that your bot is in. And I mean, that's a lot. I don't necessarily want that because I want the option to be able to go in and change it, to go in, change the take profit price, to change the safety trade, change whatever I want to change, or add more funds or whatever to my deals. And if I have 20 deals, like that's going to be sort of a headache. That's going to be a lot of work. And I'm already working on, my active deals and my other things. So I don't really want 20 deals. Maybe you do. Maybe you just want to really hone in on the bots and you want everything to be based off of your bots, then, go at it and have as many deals as you want. But personally, I like to keep my max active deals at 5. And this is a good number because now I'm not going to be in any more than 5 trades. And also you have to remember that the more trades that you have, the more you're spreading yourself thin when it comes to how much money you could actually put into each trade. If you have only 5 trades though, or less, then you could put a lot more money into those trades, which means that you will make a lot more money when those trades actually hit their take profits. So I would much rather have, say, 5 trades where the maximum amount that I could put into them is, say, $5,000, as opposed to 20 trades where the maximum amount that I could put into them is only $250, because I want bigger gains and I could better control less active deals. So I'm going to stick with 5, but you could have this really be any number you want. And so just to be super clear, what this means is that your bot will actively be searching for deal start conditions or whatever parameters that you choose to start your trades. It'll be searching all of these different cryptocurrencies. And if any of them hit, then it will start that deal. It'll start that trade. So with me having 5 as my maximum amount of active deals, let's say that Aave hits, Cardano hits, Algo hits, Atom hits, and Audio hits. Well, that's 5 different cryptocurrencies. So if all 5 of these get hit, then the bot will not open any more trades. It will not open any more trades for any other cryptocurrency, even if these cryptocurrencies hit my parameters for my trade to open, my deal start conditions. It's still not going to open them because my maximum amount of deals that I have down here is set to 5. And of course, you could set it to 1 also. And if it's set to 1, then as soon as one cryptocurrency gets hit and the deal starts, then it won't open up anything else. So the less amount of deals that you have on here, the more capital you want to put in to your base orders and safety orders and just trade in general. Because if you only have 1 or 2 or 3 max active deals, but you're not using a lot of capital, then the rest of the capital that you're not using is going to go to waste. So you want to make sure that the maximum amount of deals is in line and makes sense when it comes to how much money you are actually putting into each deal. And so that's max active deals. Next to that is the strategy, and of course we're going long. The short bots will be covered in another video because they're more advanced, but long is simply buying low and selling when the price moves higher, so you make a profit. Also, there's the profit currency. We are sticking with the quote currency, which is USDT. That is because right now the prices are actually going down, so there's no point in me taking the profit in the base currency. If the cryptocurrency is going to go down in value, I might as well just take it in my quote currency in USDT and then just go all in with the USDT that I accumulate once the price for whatever cryptocurrency I want is at a really good value. And so I'm going to keep this in the quote currency, and I recommend keeping it in the quote currency unless the cryptocurrencies are moving up. Then of course you want to have as many cryptocurrencies as possible. Or if the market is at its lows, or you believe that it's at its lows, or it's very, very, very low, like, so let's say 70, 80% off from the highs, then maybe you want to just accumulate as much cryptocurrency as possible. Although personally, I just like the USDT because it makes things easier, and then I can just actively trade my USDT. So because of the current market conditions right now and the fact that I actively trade, I have this in USDT. But of course, like I said, if you want more cryptocurrency just in general, then you can use base as your profit currency. And so coming down over here to the base order size, like I've mentioned in previous videos, and you should already know this by now, the base order size is the size of the very first order that gets put into the books and gets activated when your bot initially starts. So right now it's at 10, and we're going to set this to 100 for this cryptocurrency. So that is the base order, and now we have the safety order sizes, and we already went over safety orders in the previous video, but just to recap, the safety orders are the orders that will happen after your base order is hit. And in this video, I'm going to explain a little bit more advanced features when it comes to the safety order size. So in video 2, when we created our previous bot, we've always had the base order and the safety order set to the same size. So right now it's at 100 and the safety order is at 100. Before, I believe it was at 10 and 10, but regardless, it's at the same size. You don't actually want it to be at the same size. In fact, you want your safety order to be at least double of your base order size. So if we have a base order size of $100, we want our safety order size to be $200. And let me explain why right now. So right here, I have an example of the base order and the safety order being the same exact size. So in this example, our base order, which is a $100 investment, was hit as soon as the price of the cryptocurrency hit $20. You can see that right here, $20. And so it hit, and this was our base order. And as soon as our base order of $100 was hit, a safety order of $100 was put in place, 25% lower at $15. Now, the price came down and it hit our safety order at $15. And because both the base order and the safety order was $100 of investment, the average buy-in price is exactly in the middle, right in between them. And so let's create a hypothetical take profit, and we'll put our take profit here, and we'll just label this like this, take profit, and this moves above our average buy-in price. So as soon as we bought in right over here, then our average buy-in price was right here because this was the base order, it was the only one that we put in, and then our take profit was right here. So let's say that it bought here, but the next day it started here and it never actually reached our take profit. Just ignore this little wick right here. Let's say that it never reached our take profit. And so in this case, the price came down and it hit our safety order number 1, and our average buy-in price, instead of being right here, now our average buy-in price is right in the middle. So our take profit needs to come down, and our take profit came down. And let's say our take profit came down to right here. Well, even though it had this spike right here, it still never actually hit our take profit. However, what if instead of $100 and $100, you had $100 for your base order and you had $200 for your safety order size? Well, going back to the chart, if we change this to $200, now you would buy right here, you wouldn't get hit for your take profit, but the price would come down and your new safety order, your first safety order, would get hit right here. Well, in this case, because you bought more down here, you bought $200 down here, now your average buy-in price, instead of it being $17.50, it's actually gonna be around $16.30 or something like that. It's gonna be down here. So this is much better than where it was. This is a few percentage points. This is 3%, almost 4%. Actually, it is 4% down from from where it was before. So it's significantly lower. And that's because you put more money in your safety order than you did in your base order. So you always want to have your safety orders be bigger than your base order. Because when you do that, it will lower your average buy-in price. And you can see right here, your average buy-in price came down here. And then if that's the case, then your take profit would be, somewhere right here. And of course, it would have taken the profit and you would have gone out in profit. And then you could have restarted the bot somewhere down here instead. So that is why this works. And just so that you understand a little bit more detail, if you put $100 in when the price is $20, you're buying 5 shares, right? You're basically buying 5 shares or 5 cryptocurrencies or whatever. And if you put $200 in at $15, then you're really buying 13.33 cryptocurrencies or 13.33 shares or whatever you want to say. You're buying a lot more. So you're buying 5 here, but you're buying 13 down here. So of course your average buy-in price is going to be much lower because you're buying so much more down here. And as your safety orders continue to get stacked, as the price gets lower, your safety orders should be worth more and more and more. And you could actually set that up in the bot. So we're going to go over that in just a little bit. And that's why you want to have your safety order size be larger than your base order size. And then underneath that, we have start order type. It's either market or limit. And I really don't like to get hit with fees. I want to reduce the amount of fees as possible. And when you're dealing with bots that could be trading, or that do trade 24/7, they could put on a lot of trades. And every single time a bot puts on a trade, just like how when you put on a trade, if you use a market order, you're going to be hit with higher fees. Limit orders have less fees, so I always like to choose limit order. If you choose limit order, what this means is that once your base price gets hit or your base order gets hit, the bot will put on however many limit orders you choose. And you could actually choose that somewhere down here. You could choose the max active safety trades count. And this is how many safety trades the bot will put into the order books. So if you have a limit right here, then as soon as your base order gets hit, then the bot will automatically put on at least your first safety order in the books. And of course, you could change this from 1 to basically however many are available to you based off of how much money you have in your account and your particular strategy and everything like that. So I'm leaving this at 2. We'll come back to that in just a little bit. Now, underneath that, we have deal start condition. And this is where the magic happens, okay? This is where you actually get into, actual bots. This is where 3Commas really shines. And so right now there's manual/API. And firstly, let me just say this. For the composite bots, this comes up. Don't ever do this. This is only available, or it only works when you connect this bot or when you connect your 3Commas account to an external software, or when you use some code. And so you have to be a developer, you have to be a programmer, or you have to have external software to use this manual/API. And it even says right here, bot won't open new trades automatically. So never use this. It's pointless. There's no point in using it. However, there are other things. There are other deal start conditions that obviously are useful. TradingView, QFL, RSI 7, Ultimate 71428, TA presets, CQS scalping, TradingView custom signal, and I have the TBT signals on mine right now as well. So there's a whole host of different deal start conditions, and in the next video we're going to go over as many of these as possible. We're going to go over all of them, and including the TradingView custom signal. But for this video, we're going to stick with RSI 7 because it's pretty much the most well-known indicator there is. So we're going to put this on 15 minutes and under 70. We're going to change this up. I'm going to explain what this is right now. So let me just explain what the RSI means and how this deal start condition, when it's set to RSI 7, how that actually works. So actually I just paused the video and I bought some right now, but we're going to go over the RSI because that's what this video is about. So pretty much the RSI is an indicator that you can use that will help you in your trading journey, help you to trade cryptocurrencies and also help you to trade stocks and whatever else you want to trade. And the RSI might actually be the most popular indicator that traders use. So in order to get the RSI up in your TradingView account, you need to have a TradingView account. So you have to log up to TradingView, and I'll have a link for TradingView in the description. I highly recommend getting a pro TradingView account because like if you're gonna take trading seriously, you really need one. And also you're gonna need a pro TradingView account to use some of the deal start conditions that we'll talk about in the next video. But we're gonna talk about the preset RSI condition in this video. So if you click right here on indicators and strategies, you could type in RSI and it comes up with relative strength index. That is what the RSI stands for. So you could just click that button and you'll see that something pops up right down here. And to be honest, this is great, but I have one that I like a little bit more than just the standard RSI. It's called the Divergence Flag. So I use this instead, and this is literally an exact copy of the RSI. You could see it's an exact copy right here and here, so here's the tops, here's another top, here's another top, here's the bottom, so it's the same thing. So I'm just going to delete the standard RSI. I'm going to use this one because I like this one better, because this one actually shows you, it's just more clear in my opinion, better colors, and it also has little divergences that it shows you right here in the different color schemes. So with that, you could see, and we will bring this up, you could see that there is 80, 60, 40, 20, and there is a line at the 80 mark, there's a line at the 20 mark, and there's also a line at the 70 mark, and there's a line at the 30 mark, and then there's the midline at the 50 mark. So what this means is that when the RSI is above 70 right here, this whole area all up in here, this is when the price is overbought, or the cryptocurrency is overbought. It means too many people bought it. It says that the relative strength of the cryptocurrency is too high. It's too high. It's like it needs to back off, it should not be this high. And you can see that right here was a big top, and you can see that it dropped right after that. And then here there was another top, and you can see it dropped drastically after that. Here is another top, and you can see it dropped drastically after that. Here's another two tops, and you can see obviously it dropped crazy after these two tops. And so when the RSI is above 70, you most likely want to take your profits, or you want to get out of your trade or whatever. But in the opposite end, if it is under 30, you can see 30 right here, that is when the cryptocurrency in question is oversold. It means that the market is overreacting in the opposite direction. It's overreacting in the sell pressure. So it's being sold way too hard, and the price is way too low for what the actual cryptocurrency is worth. And that means that the price is probably going to rebound and bounce up. And you could see that right here. This is really the only time in the last year that we've had the RSI under 30, and this was actually the lowest price. The lowest price in the last year was pretty much when the RSI was under 30. So that goes to tell you that if the RSI is under 30, that is a fantastic buying opportunity. And you can configure your bot to buy when the RSI is under 30, or when the RSI is under 10, or whatever you want. Now, this is on the daily time frame, and you're probably not going to be using the bots on a daily time frame because you're going to be stuck in your trades for a very long time. So let's go down to the 4-hour time frame and see what that says. So the 4-hour time frame is very similar. The last time it was oversold, first it was oversold here, and it had a small drop. So it did have a drop, but it actually ended up coming back up. So it's not foolproof. And that's something that you need to know, is that it's not like, oh, it's oversold and then you sell it, or it's overbought, so then you sell it. That's not what this means. You have to understand how to actually read this and understand this. You have to understand what's known as divergences, and I teach all of this in the Crypto Mastery course at cryptoelite.com. So if you want to learn about how to actually read this, you could go over to cryptoelite.com and take the course. And you can see right here is another overbought signal, and it ended up dropping a little bit, and it had just one more pop up before it just crashed all the way down. And when it crashed all the way down, right here was the first oversold, and it popped back up. Here's the second oversold, and it ended up popping back up from the second oversold. Here's the third oversold, had a little pop up there. Fourth oversold, had a little pop up there. So you could see that the pop-ups on the 4-hour chart are not as drastic as they are on the daily chart, and that's always going to be the case. Although you're still getting freaking up to 30% on the 4-hour chart, which is a chart that I really like. And so the lower the time frame the chart is, the more these signals will appear. However, it's important to note that the lower the time frame is on the chart, the more false signals that it will create. And so on the daily chart, there's not that many signals, because this is over an entire year period, and there's only been one oversold, and there's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 overbought. But on the 4-hour, if you look on the 4-hour, you could already tell 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. There's so many overbought signals, and there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. There's so many overbought signals as well. Oversold signals. Keep on messing that up. Over the 70 line is overbought, and under the 30 line is oversold. So there's a lot more signals on the lower time frames, and bots a lot of times use the 1-hour time frame or below, which is going to give you even more signals, even more noise. But if you configure your bot correctly, it still should do really well, especially when you use safety orders. So you could see this was like the first oversold right here, but it did have a bounce. So if you had bought it on the oversold and then you sold it on the bounce, you would be perfectly fine. The next oversold was right here. So let's say you bought it right here, and let's say you didn't actually sell it in time. Your bot did not sell it in time or sell it at the right price. Well, if you have safety orders, you would have bought it here, and then you would have bought it again down here. And of course, we had the bounce, so you would have gotten out, right around here, and you would have made a profit. Same thing for the oversold right here. It was oversold, so you would have started it right here, and then your safety order would have came up right here, and you would have sold it somewhere around here. So pretty much if you have on the 1-hour time frame to buy when the RSI is under 30, it looks to be really good, because this is another time oversold right here. So you would have bought it, and then your safety order would have kicked in right here, and you would have gotten out right here. Or if you didn't get out right there, then your safety order number 2 would have triggered somewhere around here, and you would have gotten out right here. So it's looking pretty good for this particular thing. So let's go back to 3Commas and check it out one more time. Okay, so going back to 3Commas, you could see that the deal start condition for this bot is the RSI 7, 15 minutes, 70. What does that mean? Well, let's go back to TradingView and check it out. First off, it's the RSI 7, so double click or edit the settings on the RSI, and you can see that the RSI here is set to 14. So we want this to be 7, and no matter what type of RSI you're using, it's usually set to 14 as the standard RSI style or number of units that it counts. But we want this to be 7. So we're going to click 7, and we're going to click OK. And now what that does is that actually uses 7 as the number of units that it counts. Basically, we're on the 1 hour, so it's counting 7 hours back and determining the indicator based off of the past 7 candlesticks. So we're on the hour. If we're on the daily, then it determines out of the past 7 candlesticks. And what this means is that you're going to have more signals, okay? So you're going to have a lot more signals because it's only doing a shorter period of time. It's only doing 7 candlesticks as opposed to the traditional RSI, which is 14, and that takes a lot more time because it has a lot more data that it's processing, and it's more accurate too. But they use 7 as their standard predefined deal start condition in 3Commas, so we have to set this to 7 to really get a good picture. And I put it on the 15-minute chart, so let's look at the 15-minute chart, and you could see that there are just a ridiculous amount of oversold and overbought signals on this. And I mean, I guess if you're looking for 2% profit on these type of signals, then that could work because it's usually going up and down 2 to 3%. So in this last case, you would have bought here, and then you would have bought again, and you would have bought again, and then you would have been able to sell for around 2%. So if you're just trying to get 1 or 2%, it's actually not a bad idea. It looks to be pretty solid on the 15-minute chart. Let's look at the 4-hour chart though. I like the actually no, let's look at the 1-hour chart. I want something to be in between just going off and off like all the time and actually, you know, being more accurate. So this looks pretty good to me. The RSI is set to 7, so we would have bought right here. This would have worked. The previous one, this would have worked because this is 4%. Yeah, so this helps to guarantee that it really will get you gains pretty much. And so I'm going to set this to 1 hour. So going back to the deal start condition, we're going to put this at the 1 hour mark, and this is under 70. That's when it will start. I definitely don't want it to be under 70. So this is exactly why you should know how to trade cryptocurrencies. You should understand technical analysis. You need to know these indicators because this one was going to start the condition if it was under 70. That doesn't make any sense to me. I want it to start if it's under 30, because if it's under 30, then that's when it's oversold, and that has the highest likelihood of returning to a normal, you know, RSI, a normal price, and bouncing from under 30. So I'm setting this to under 30. You definitely don't want it to be under 70. That just seems, honestly, it seems sort of stupid to me. They should definitely change that, and I will comment and tell them to change that. So right now we have the RSI 7 on the 1 hour time frame, under 30 as the deal start condition. So now when the 7-unit RSI hits under 30 on the 1 hour time frame for literally any of these cryptocurrencies that we chose for our composite bot, it will start the condition. It will start the trade. It'll start the bot. How cool is that? So now, instead of having to go through every single coin or look at a scanner or something like that to see where the RSI is for any of them, you could just set this up and automatically it'll buy as soon as the price gets to be oversold in the RSI. That's amazing, actually. So this is really, really, really cool. And it will buy $100 worth of any of these things. And remember, we have 5 as the number of safety orders. So let's say that literally all of them crash super hard and they all go under 30 on the RSI. Well, the bot will activate when the first 5 of them happen to go under the parameters of 30 for the RSI, and that's when it will activate, and it'll activate for 5 of them, and then it won't activate for any more. So you'll have $500 in at that point, and then we will have the safety orders come into play. So let's go down to the safety orders. But actually, before we do that, I want to actually change the name of this bot. This is the test Composite Bot 2, right? But I'm going to put the parameter for how the deal start condition works in the name of this bot, because that's going to help me know right off the bat when I look at my deals, when I look at my bots, what this bot is. So this is the RSI 7 under 30. So that's going to just help me tremendously, and I recommend that you name your bots according to the specific deal start condition that you choose, because it'll just help in the future. So now let's go into the safety orders. So by now, you should know what safety orders are because you should have watched the first 2 videos first. But just as a recap, the safety orders are how your bot dollar cost averages into the cryptocurrency if the price continues to fall. So right now we have a max safety trades count of 5. And how do you want to determine this is based off of the strategy. So right now we have the RSI 7 on the 1 hour chart and it's under the 30 minutes. So if we have, let's say 5 as our max safety trades count, what we want to do is we want to look at the chart and we want to determine what percentage deviation below our base order, how many percentage points does the price typically go below our base order or below the RSI 7 or below once the RSI 7 on the 1 hour time frame hits under 30. And if that doesn't make any sense, let me explain it to you right now. Let's go back into TradingView and check it out. So going back into TradingView, we're on Link USDT on the 1 hour time frame. We have the RSI right here, and we want to know the percentage that the price typically drops after it reaches our deal start condition that we have. So let's just like go back in the history and check it out. And so let's just start here. So this is right when the deal start condition would start because the price fell under 30. So let's actually do this. And so it fell under 30 right here. You can see that. And so the first buy-in price would be right when it hits under 30, which was right here. So we would enter our base order right here. Okay, obviously it never came up enough to take our profit. So this trade would definitely have safety orders put in. So if this was our first trade, the next safety order should come in around 3% below that, 3 to 5% below that. So let's say 3% is our next safety order. So if we have a safety order set for 3% below our base order, then we would have hit it right here. And if we would have hit it right here, the price would have come up 4%, which would have hit our take profit. So we would have been fine right there. And then the bot would have finished out this trade. And so for example, if we have this trade set up so that the bot starts the condition once the price hits under 30, and let's just say the price was right here, we don't know any of this, and we could actually simply just do this. And so let's say that we have the deal start condition for the RSI under 30. Well, it hit under 30 right here. You can see it's at 26, 27, 28, right? So it's under 30. So we would buy it right here. And let's say we bought it right here. And let's say our take profit was 2% and our safety trade was 3%. So if it drops 3%, we'll put in a safety trade. And if the price jumps up 2% from our average buy-in price, then we will take our profit. So if we bought it right here, it didn't reach 2%, so we would still be in the trade. And then if this was 3%, then we would have bought somewhere, right around here as our safety trade, and our average buying price would be somewhere in the middle. Actually, it would be lower than the middle because remember, our safety trades are worth more than our base trades. So we put more into our safety trades than we put into our base trades because it lowers the average buy-in price, right? So that means that our average buy-in price would be somewhere down here, and it actually didn't reach the 2%. So in this example, let's just, I suppose, keep on going. It ended up reaching the 2% fairly quickly, just a few hours later. So if this would have been our buy-in price, our average buy-in price, after our base order hit here and our safety order hit here, then we would have gotten out right around here, and we would have gotten our 2% profit, which is great. And that is what this is set up. And so if we go back to 3Commas, we could see that in that particular trade, for this setup, we would have only hit one of our safety orders if our take profit was set at 2%. So we're going to have our take profit set at 2%. And for our max safety trades count, do we really need 5? Well, let's test it out again. So going back into TradingView, this trade would be closed out and the next trade would open under the deal start condition once this hits under 30. So let's play this out. Boom, it hit under 30 right here. So we would have opened up our trade, say right there. And if we have a 2% take profit, we would have actually won. We would have actually been out of our trade and we would have won. So that looks good to me right there. Let's see the next time that it would have opened. Actually, it would have opened again immediately right here. Would we have gotten our take profit on this one? Yet we would have gotten our take profit because it jumped up over 2%. So that's a win. That's another win. Let's see. Down here, it hit under 30 again. So we would have had our first entry order under 30 right around here. So this would have been our base order. And if we have a safety order set for 3%, because that's what we determined looked like a pretty good safety order, it would have hit right around there. So that's our base order. This would have been our safety order, somewhere like right around there. So our average price would be somewhere around here. This would have been our average buy-in price, and we want 2%, so it has not hit our 2%. Although, however, did it continue to fall 3%? No, so we have one safety order in, and we have our base order in right now. So let's keep on going. Would that have hit? Let's just check it out. Yep, so that would have hit right here, and we would have gotten out, and we would have taken profit. So that would have been profitable. All right, let's try this again. Actually, let me just right here for. So now the next trade that would go on would be if this reaches under 30 again. So let's see. Okay, boom, it reached under 30 right here. So we would have had our base order right. Oops, we would have had our base order come in right here. So this was where our base order would have been hit. And let's check out 2% profit. All right. Okay, so it didn't hit our 2% profit, but obviously it did go down. So it went down 3% right around here. So we would have gotten in our safety order number 1 right around here. Oops, let me turn this off. Right around here's where safety order number 1 would have been hit. And then would we have another 3% drop after that? Yes, we would have. So then safety order 2 would have been hit right around here. So we have our base order, safety order number 1, which is $200. Safety order number 2, which is going to be actually even bigger than $200. I'm going to teach you that right now. I'm going to teach you that in a second. And we want a 2% take profit. So our average buy-in price would be somewhere around here. And we want a 2% take profit. So did we get it? Not quite yet. Okay, we would have gotten it. So we would have closed out the trade for another one. So it's looking like 2 safety trades is really the a good amount of safety trades. So to be on the safe sides, let's use 3. And so I'm gonna change this. I'm gonna change this from 5. I'm gonna change it to 3 just to be on the safe side, even though honestly 2 safety trades has been all that we've been needing to use. But we're going to have this on 3 because just you saw over the last few examples that using this particular strategy, it usually hits 2 safety trades. Usually hits 1 safety trade and then goes back up. In some rare occasions, it will hit 2 safety trades and then go back up. So I'll have 3 just in case there's a crazy, a crazy thing. So now with this, when the RSI on the 1 hour time frame hits under 30, it will put $100 in. And then once it goes 3% underneath that, it will add $200 to the trade. And then with these settings, once it hits 3% under that, so once it hits 6% down, it'll add another $200 into the trade. But what we want, okay, is we want the amount of money that we put into the trade to increase as the price decreases continually. So right now we have the base order at 100 and the safety order at 200. So we're putting in twice as much in our safety orders, right? However, that's for all the safety orders. All of the safety orders are going to be $200. But what if we could put $100 in as our base order, $200 in as our safety order number 1, and then let's say $400 in as our safety order number 2. And then let's say $800 in as our safety order number 3. that would be pretty freaking amazing. So that is exactly what the safety order volume scale does. It increases the amount of volume that you put in to the trade every single safety order. So right now it's set to 1. So because this is set to 1, every single safety order is going to be $200. So just to go back to TradingView and show you what this means, let's say that this was our base order $100, right? And we have our safety order set, right? So this is the safety order 1, and we set that at $200, right? Well, right now we have, if this was safety order 3 was hit down here, or excuse me, safety order 2 was hit down here, right now it's set at $200. But let's come back here, right? And let's set this to 2. And I'm going to show you something. If you look right up here and click chart, you could see a really, really clear layout of what this means, right? So the safety order volume scale. Let's bring this back to 1 really quickly. So what this means is step 0 is your base order. It's going to be $100. Step 1 is your first safety order. It's going to be $200. Step 2 is safety order number 2, and that's also going to be $200. And step 3, safety order number 3, is going to be $200 as well. I want my safety orders to increase in value because as they increase in value, that lowers my average buy-in price. And so I'm going to set this to 2 just to make it easy. And the number that you choose for this should be determined based off of your max safety trades count. If you have 20 safety trades or 10 safety trades, maybe even 5, you don't want to have 2 for your safety order volume scale. It's going to be absolutely ridiculous. But I only have 3 for my max safety trade count, so I'm fine doubling it every single time. It's not a big deal. But if you have more than 3, you definitely don't want this to be 2. Normally this is like 1.1, okay? Maybe 1.2, but honestly it's like 1.1 for the maximum amount of the safety order volume scale. And I will go into this in a more advanced video down the line, but right now, to make things easy, we're going to set this to 2 because it's simple to understand. So what this means is now the base order will still be $100 because we have $100 set as the base order, as you can see. Safety order size, the first safety order is going to be $200 because we put $200 here. What's safety order number 2 going to be? If this is set to 2, what is safety order 2 going to be? Well, safety order number 1 was $200. And this doubles the previous safety order. So safety order number 2 is going to be $400. So let's go back to TradingView just to write that out. And we're going to put this at $400, right? So if this is the case, when this base order hits, that's our average buying price. And we're going to put that as a green average buy-in price, right? So right when your base order hits, that's the only order you have, that's your average buy-in price. Then your safety order 1 hits, and it lowers it to around here. Now safety order 2 hits, and it lowers it down even more, down to around here. So it continues to lower your average buy-in price significantly as your safety orders get hit. And for this particular trade setup that we're doing right now, we have 3 maximum safety orders. So if another safety order were to have been hit, and if we are setting the volume scale for our safety orders at 2, then safety order number 3 would be 2 times 400, 2 times the last one, which is going to be $800. So now we have $800, and that's going to lower our average buying price even more if it was hit. In this case, we took our profit right here, and then we had to wait until this dump right here to buy in. But that's the case. That's what this means. And you could see this being visually represented on this scale, how much money will be invested into the particular trade if you have 3 safety orders. So once again, first order is 0. So once again, step number 0 is your base order. That's $100. Then you put in $200, so you have $300 total invested into this particular deal. If the safety order number 2 gets hit, then you're going to add $400, and your total invested is going to be $700. If safety order number 3 gets hit, your final safety order, you're going to put another $800 in, and your total USDT invested into this particular trade is going to be $1,500. And that's the most amount of money in this particular setup that you will put into every deal. So with this being the case, if you have all of these coins that the bot is scanning and you have your max active deals set to 1, what is the maximum amount of money that the bot can put in to your deals? I'll give you a few seconds to think about it. Remember that if all safety orders were hit, then your maximum amount of money that you will put in to your deal is $1,500. So if this is set to 1, if your max active deals is set to 1 on a composite bot that has all of these cryptocurrencies, what's the maximum amount of money that the bot can use? This is not a trick question. So answer that and come right back. All right, 3, 2, 1. Okay, so now we're back, and the answer, of course, is $1,500. And you can see that by going to this assistant right here. Max amount for bot usage based on current rate, $1,500. So if the maximum amount of deals is put on to this bot, right now it's only 1, $1,500 is going to be it. This is super important. This is extremely important information, which is why I'm going over it, by the way, because this is what you need to know to make sure that you are safely using the bots and you're not going to end up losing a whole bunch of money. So if I set this to 5, what is the maximum amount the bot can use if all 5 deals become activated and all 3 safety trades get activated on all 5 deals? I'll give you 3 seconds to answer that. 3, 2, 1. The answer, of course, is $7,500, which is $1,500 times 5. And to make that totally clear, what this means is that if all 5 deals get hit, so let's say that the RSI goes under 30 on 5 of these coins, all 5 of your deals will begin. And you will have $100 in each deal as your base order. Then let's say that the price continues to drop for every single coin and every single trade that you're in. Well, that means that your safety order will be filled. Your first safety order is $200. Then if it continues to drop and it drops 3%, you will have your second safety order put in. Your second safety order is 2 times your previous one. So your second safety order will be $400 because it's 2 times 200, which is $400. Then if the price drops 3% again, you will have 2 times your previous safety order. So looking at this chart, your safety order number 2 was $400. So safety order number 3, which is your final safety order, is going to be $800, leaving you with $1,500 total. And $1,500 in 5 trades or 5 deals leaves you with a total maximum amount of $7,500. Now, this particular paper trading account has over $31,000 in it. So I want to put a lot more than $7,500 into the maximum amount as the max amount for the bot to actually use for this deal. So I'm actually going to change a couple things. The first thing that I'm going to change is the base order size. I'm going to change this to $1,000. And then my safety order size, I'm going to change to $2,000. Now, that's too much. That's way too much, because that means that if all safety orders get hit, then it's going to cost $75,000. And that's more than double what I have. So this is way too much. Let's make this half. 500 and 1,000, right? So if it's half that, then that means that that if all of my safety orders are hit, then $37,500 will be used. But that's still more than I actually have in this account. So I don't necessarily want to do that either. So let's just change this to, let's say, 400 and then 800. And that's a good amount, because what this means is that if every single safety order gets hit, then I will be putting in $30,000. And that means that I have enough funds for all of the safety orders to get hit. And that's good. That's what I want. It's much riskier. It's way more risky to say put in more funds than you have available, or to have the max amount that the bot could use be greater than your maximum balance. It's really risky to do that. You can do that, but then if that happens and your bot activates all of the safety deals, then you're going to be out of luck, because first off, you're not going to be able to actually execute every single safety deal. You're going to be out of funds before you could even get to that point. And secondly, you're going to have to bail out and add more funds from a separate account. And you want this to be basically as passive as possible. And you don't really want to be messing around and having to add funds from other accounts. It gets complicated if you start doing that. Of course, if this is your full-time job, then yeah, sure, you could go that route. But you really, really want to make sure that the maximum amount that the bot will use does not exceed your entire balance. And if you want to be more conservative with this, if you want to be like honestly really more safe with it, then the max amount should really be less than however much you have. This is super close. This is 95%. 80% is a pretty good number for here, because if this was 80% right here, then that means that if all of my deals were active, that I would have 20% in order to bail them out if the price keeps on dropping. Right now, I only have 5% or 4.1% to bail out my trades, which really wouldn't be enough, but I'm pretty comfortable with this, to be honest. So I'm gonna stick with this, and we're gonna keep this right here. Okay, so moving on from that, let's move on to something else. The stop loss. If we keep on going down, you'll see stop loss. I do not recommend using stop losses in your bots. The crypto market is way too volatile. If you use stop losses, you will most likely be stopped out. This is bots, and so you don't want to use stop losses. I recommend not using stop losses for bots. You just want them to run 24/7. And if you use stop losses for bots, you're probably going to end up losing more money than you make, to be honest, just to be totally clear. So I'm going to leave this on off, and maybe in a future video, we'll go over stop losses for your bots. But honestly, right now, as of this moment, I really see no need to ever use a stop loss in a bot. So we're going to leave this for off, and we're also going to have the take profit be 2% without it being trailing. And of course, it's percent from total volume, because we want it to be the percent from your average buy-in price. So we're leaving it like this. And so let's go down a little bit more. We already covered the safety orders, in depth, like over and over and over again. So 3 safety orders total for each deal. Max active safety trades count is going to be 2. So we're going to put 2 orders into the books for every deal. Price deviation to open the safety orders is 3%. Safety order volume scale is 2. So we're going to double the safety orders every single time they get hit. Safety order step scale is going to be 1. We're going to go over this in the next video or in another video. This is a little bit more advanced, so we're going to save some time and not go over this, but you could just keep this at 1. Pretty much what this means is that if this was at 2, then your first safety order would be 3% below your base price, and then your next safety order would be 2 times 3, so it would be 6. And then your third safety order would be 2 times 6. So this having this on 2 is absolutely ridiculous. We're gonna keep this at 1. You might want to have this at 1.1 or 1.2, but like anything super high is too much. I like 1.1 usually for my bots, so I like 1.1, but for this particular bot, since we just went over TradingView and we looked at it a couple times, we're just gonna leave this at 1. And the advanced settings, we're not going to deal with any of these because, like I said, we picked out really good coins, so we don't really need to deal with the advanced settings. And I'm pretty sure that basically covers this bot. Top down, once again, test Composite Bot, RSI 7 under 30, exchange is the paper trading account. It's a composite bot. We have these coins that it will be scanning to actually trade. The strategy will open up 5 deals maximum at a time. It's a long bot, quote USDT, so we're going to be taking all of our profits in USDT. The base order, we'll put in $400 our base order. We'll double that for the safety order, and then we will continue to double our safety orders every single time they get hit. We want to have the limit order for reasons explained earlier. Deal start condition is the RSI 7. We explained that. It's the 1 hour under 30. Take profit is going to be 2%. We explained why we're going to do that. Percentage from total volume for the average buy-in price, so we explained that. No stop loss, we explained that. Safety orders, 3, 2, we explained all of this stuff. So really, this is the bot. Yeah, this is the bot. So let's create it. Create the bot, and we're going to have the bot successfully saved. Start, bot is turned on, okay, and it should bring me up to this particular thing. So now what we could do is we can go to my deals, and the bot, obviously it has not opened yet. It has not started any trades yet because we just started it and no coin is under the 30 RSI at this point. So what we're going to do is we're going to go to my bots, and we're going to simply see right here, test Composite Bot 2, RSI 7 under 30, and you can see everything that we just set up, and it uses all of these different coins. So this is literally what we just said. The status is set to on, so it is on. So once the parameter is hit, then it will actually be hit. And I guess the last thing that I want to clarify is the deal start condition versus the safety orders. So let's just go into TradingView one more time to clarify that. And so we're back in TradingView, and just to clarify what the deal start condition means against the safety orders, it means that once your deal start condition gets activated, once the parameters for your deal start condition hits, then it will open up the trade and your base order will be put in. Then your safety orders will be put into place based off of the parameters in your safety order setup. So it's not going to, wait until the RSI is under 30 again to open up another trade. That's not how it works. It works by opening up the trade, starting the trade by the deal start condition of the parameter when the RSI goes under 30. Your safety orders are strictly based off of the percentage and the volume that you chose underneath the safety orders settings. So we put 3%. So as soon as it hits 3%, we're going to put our safety order in, and then once it hits 3% underneath there, we're going to put another safety order in, okay? And then once it hits 3% under there, we're going to put another safety order in. It does not matter if the RSI is under 30 or if the RSI is over 70. In these cases, for your safety orders are strictly based off of these parameters. So that is something that I had a question about, and so I'm sure you probably had that question as well. So I just want to make that clear. And so that's going to do it for video number 3 in this crypto trading bot series. I want to congratulate you on making your first composite crypto trading bot with 3Commas. Just as a recap, you learned about composite bots, you learned about TradingView deal start conditions, safety order volume scale, and safety order step scale, along with a few other things in this video. So what do you do next? Well, if you're on a roll and you're watching all these videos in this series, then you can go watch the next video in this series where you'll learn how to take advantage of even more deal start conditions and even more advanced features that I didn't go over in this video. I do know that there were a lot of topics that we covered in this video, so if you haven't already made a bot, you might want to do that, or you might want to take a break and come back to it. Either way, congratulations on actually getting to the end of this video. The other thing that you could do if you want is you could join the free Discord group. It's over at cryptoelite.com/discord, or you could join the paid one, which is also at cryptoelite.com/discord and at cryptoelite.com/home if you want to actually learn how to trade and learn how I trade and my step-by-step system that I personally use to perform my active trade deals. You could go there and get the course. And also, like and comment on this video, please. If this helped you out, I put a lot of effort into this. So if this video helped you out, or if you have any questions or comments or concerns or anything that you want to say, just comment it below. Liking this video and commenting, even something like good tutorial or like thanks, I learned a lot, anything like that helps me out, helps this channel grow. I want to provide as much educational content as I possibly can. I know that there are a lot of people in the crypto space that are just scammers, or that are just trying to get people and lead people astray, and it's just so annoying because there's not enough people who are just literally giving out facts and like just telling you, okay, you could do this or you could do that, and like the space is so early. Everyone here can make money. We don't have to scam each other and do these crazy stupid things, you know? So that's why I want to provide you with this amazing information, because if you know this information, like, can you imagine what you could do even if you only have a little bit of money and you just put it into a bot and you just keep on working, and then you have your bot work for you, and you keep on putting money in, and you just grow in this cryptocurrency space over the years and years and years. Like, crypto is here to stay. Blockchain technology is here to stay. Like, it's going to be implemented in every single business and every single everywhere, everything really, eventually down the line. So we're still so early. It's crazy how early we still are, and it's amazing to even think of that. So anyway, I'm going off on a tangent. I just want to say thank you again for watching. Keep on watching. Make sure to like and subscribe, and obviously all the other things that I said. Keep on stacking those sats. Keep on making those gains. Keep on trading intelligently, and just like, you know, have an awesome day. If you're watching this during the day, have an awesome night if you're watching this at night. And I'll see you in the next video. All right, guys. So here's a little extra, a little bonus clip for you. Basically, I created that bot, I want to say about 3 weeks ago, maybe 4 weeks ago. I'm not entirely sure, but it has been running for quite a while now. So what I just did was I went into the history tab in 3Commas, and I selected the test composite bot 2 RSI 7 under 30, which is the one that I created in this video. And now we could look back and see how it has been performing. And you could see right here, completed deals profit over $3,000. Not terrible, but given the I don't know, I feel like there should be more. Just to double check right here, yeah, the base order was 400, the safety order size was 800, max safety trades count was 3, and max safety trades max active safety trades count was 2. So, and there was a 3% deviation from the initial order. So everything was the same. This is the same exact bot that I made. And you can see, actually, if I go back to that page that I was just on, there was this nice little daily summary profit for the bot. So, you know, $88 here, $160 the next day, $200 the day after that, $216 the day after that. So it's been averaging, ooh, dang, this one had over $700 gain on that one day on 7/21. 7/22 was over $900. So it's actually been, oh, wait a minute, I'm sorry. These are not the daily gains. These are the daily gains. $88, $72, $56, nothing on the 19th, $400 on the 20th, which is really amazing. And $100, $169, and then nothing, $8, $225, $128, $300, another ridiculously good day. So these are really, there's a lot of different things that you could think about this. This is amazing considering that this is literally just strictly passive income. Like, I just set it and forget it, never touched it. I have not touched it since I created that, you know, original video. This original bot, Rune, had the biggest profit apparently. So yeah, it has done good, but I feel like if I manage these trades and I turn them into active trades while they're going on, if I change maybe a couple settings, I could do even better. But you can see, you know, this was on the 12th, 11th, so on the 12th it made $56, $120. So it's actually it is doing well. It is making money. However, there were more opportunities in the past month to make a lot more money than this. For instance, like if I would have just put the $30,000 that I had in the account, if I would have just put the $30,000 into the account, into pretty much anything, even close to the lows,
everything is up, 50% to 100%. So that's way, way more than $3,000 in profit. That should be, $15,000 to $30,000 in profit. So I'm going to have to think more deeply about these bots, but I will say if you are trying to look for a completely passive approach, it would be good. But the other thing that this brings up actually is the fact that I'm probably using too little of a base order and too little of a safety order size, and probably too little of a safety order volume scale. I remember in this video, while I was rewatching it, I said that you wanted to make sure that if all of your safety orders were hit, that you had enough funds in your account to, make sure that you could cover all of them. I'm not sure if that's actually the case anymore. In fact, I would argue against that. And I would argue that you should make your base order and your safety order sizes and your volume scale even greater, so that you can get bigger gains. Either that, or in addition to that, actually, have a bigger or a wider take profit than just simply the 2% that I had right here. I could easily have put this to 10% or even 20%, and they all would have gotten hit using this strategy. So I'm going to change this up a little bit, and I'm going to put this at 1,000 and 2,000 with a safety order volume scale of 2.5, and I'm going to change the percent take profit from 2% up to 10% and see how that does. And anyway, this is going to be the end of this video. I hope you guys enjoyed it. And be sure to like and subscribe if you have not done that already. Be sure to join the Discord if you have not done that already. And also be sure to stick around and watch the next videos in the series so you could continue learning how to make more bots and continue learning how to trade. Keep on making those gains and stacking those sats. I'll see you in the next video. Later.